Everyone, welcome back. We've got a few important updates for the NIO fans, for the NIO company. These are really key infrastructure updates and innovative developments that are happening with the NIO company recently. We're also going to go through the share price, which has been doing really well lately. In fact, NIO is once again back in second place for the most valuable EV company in the world. Finally above Rivian once again, because obviously Rivian is just way overvalued. But let's focus on the key updates for NIO for right now. So NIO focuses on innovative development that have been a core driver of its success in the recent years. And they've been getting a huge amount of popularity in recent years. And that's good. That's overwhelming. Now this is where it gets interesting. Obviously, I made a video recently on NIO shipping their first battery swap station that was built in Europe, shipping it to Germany. And that was really great to see. So we do know that they're pioneering in battery swap development and systems for passenger vehicles to enable next generation autonomous mobility functions. And for NIO, at least, they're transforming the notion of automotive beyond just a mode of transportation. Looking ahead, the continued build out of power swap businesses and development of next generation platforms, this will become contemporary competitive advantage and driving sustainable growth while fast tracking NIO's realization timeline. They're expanding rapidly in Europe, and that's great. That's an absolutely brilliant thing. It's good to see that they have this expansion mindset and they're not afraid to go into open market and reach out into new destinations. Now, in terms of the stock price for this month so far, they're definitely doing better in the second half of September. For sure, they're definitely doing better. Because at the start, or at least towards the end of August, the prices were below $20 per stock. At least right now, in the second half of September, the prices are hitting $21, $22 per stock. A company value over $35 billion, almost $36 billion. That's really good. So the momentum is building for NIO right now, and that's really good. Throughout the past 6 months, as you can see, they've been extremely volatile. One of their lowest points was actually in May at only $12.71. And it's fair to say that a lot of people use that opportunity to buy a lot of shares. So NIO is expected to further scale up production of its new vehicle lines in the second half of the year, with some boasting higher margins enabled by better pricing and cost efficiency stemming from its newer platform, the NT2.0. Now, the company is expected to onboard another inflection point that will usher us towards a greater acceleration in 2023. That acceleration will be helped throughout the expansion with Europe. That acceleration will be helped throughout the expansion with announcing new vehicle, bringing new vehicles throughout their timeline. But we've also got to keep in mind that the competition is doing the exact same thing. Take a rival for an example. Take Polestar for an example. Polestar is actually announcing their new SUV, their first SUV next month in October. That vehicle will be on sale at the start of 2023, primarily being built in America, primarily targeting the American audience, and primarily it's targeting the Porsche Cayenne, an SUV in itself. And Porsche is working on an electric version of the Cayenne and the Macan. Polestar also has an advantage in that because they're also making a competitor to the Macan. Now for NIO, they're doing the same thing. They're bringing out SUVs to compete against these manufacturers. They're bringing out sedans to compete against these manufacturers. Now let's talk a little bit about the platform, their new platform, the NT2.0 Advantage. Now the thing about it is that the entire year hasn't been the best for EV companies overall. You can just look at the stock market. That will tell you the full story. The bottom line is companies like NIO, companies like Polestar, they've definitely gotten in some issues with delivery constraints, with manufacturing constraints, with semiconductors. They've been in this ongoing problem where we have a shortage of parts, not just for electric cars, but for many different technologies all around the world. This is a growing problem, but it could get a little bit worse if we're not careful. For one, it's not getting better. While GPU prices are going down, the simple fact is we still have a lot of delivery difficulties and manufacturing difficulties. Not to mention, prices are actually going up for lithium supply. And lithium is becoming ridiculously expensive, but not just lithium. Cobalt, nickel, these things are becoming more and more difficult to source, more and more expensive as well. And it's not easy to come by. Now, what I am excited for is their new SUV, the ES7. That's also begun customer deliveries in August as planned, with volumes reaching as close as to 400 units. That is paired with the ET5 mid-size sedan that is already in mass production at the NIO Park manufacturing facility, which has recently come online with deliveries expected to begin in September 30th. The company remains well positioned for further volume acceleration before the end of the year. Now, in addition to the anticipation jump in volume growth with additional capacity ramp up at the NIO Park later this year, the NT2.0 platform, which is NIO's newest vehicle models, this includes the ES7, ET7, and ET5. These are all built on the same platform, and they're expected to unlock new phase of profitability for the company. Now, this is actually really important for them because it actually increases higher margin profiles that is based on cost efficiency build, with management alluding to the next generation base as a key to unlocking 25% vehicle gross margin. That's over the long term. That's putting the company in a competitive range compared to industry peers. Next generation platform will also enable a premium pricing model, allowing NIO to be better observe near long-term volatility in rampantly rising raw material costs, particularly in lithium, a key battery component, possibly the most important battery components. So this is where demands will definitely outpace supply over the next coming years. Now let's take a look at their charging infrastructure advantage. Now, despite the recent power crisis induced by extreme weather condition in China, which has prompted NIO to temporarily suspend some of its battery swap station, as well as mobility restriction resulting from pandemic, unfortunately, the lockdowns all across the nation, swap demands have continued to soar towards new heights. This is with completion volumes to date surpassing 12 million. What we know so far is that to date, NIO has installed nearly 1,100 power swap stations. And now they're starting to roll that out into Europe, starting with Germany. Made a video on this. It was quite educational. Now, NIO ultimately wants to expand this network throughout China to more than 1,800 power charger stations that will offer more than 5,000 public chargers to its users. But keep in mind, perhaps one of the most important things that we cannot forget is the availability and convenience accessibility to public charging infrastructure. That's a key driver to EV adoption, because if people cannot charge their electric vehicles, less people are going to be willing to buy them. So this is the further collaborative trend that is observed in China, and it's becoming a problem, which is why NIO's swapping system works so well, because they can swap batteries in less than 10 minutes. While typically charging an electric car, you're looking at half an hour on an extremely fast charger, and that's not to charge to full, that's probably to charge to 60%, 70%. But you want a full charge, you're looking up to an hour sometimes, maybe an hour and a half. Now, while this is being improved, you got to keep in mind, as we adopt to more electric cars, electric chargers will become more popular, but they'll also become more busy, which will inevitably create a problem. So that is it for now in terms of updates. But in terms of the NIO stock, what are we looking towards for the end of the year? Could the share get back to $24, $25? Is it even possible? Is it even worth considering before the end of the year? Me personally, I'm not too bothered about the share price. I want to keep it as low as possible. To focus on, more importantly, is the expansion that's rapidly adding value to this company. And slowly but surely, there will be less time to invest. Once again, not financial advice, but it's just obvious. This rapid expansion is considerably increasing their value over time. And that's a good thing for electric vehicle consumers, of course. So that's where we'll end this video. Thank you for watching. Subscribe to see more. Leave a like, leave a comment. And of course, I'll see you in our next video.